This is King World News. I'm Eric King, and you're about to hear from the legendary Jim Sinclair of jsmindset.com. Remember to go to our homepage at www.kingworldnews.com for more interviews, where this week we also have Gerald Salente of the Trends Research Institute, as well as Chris Whalen, Managing Director of Institutional Risk Analytics. And on the Gold Plus page, we will be starting a 4-part systemic failure series with Jim Willey of the Hat Trick Letter. Joining us now is Mr. Gold, Jim Sinclair, founder of jsmindset.com and chairman of Tanzanian Royalty Exploration. Jim, I wanted to start off here talking about inflation and deflation.
Okay. You know what it is? It's a semantical argument.
Okay.
In a sense, both parties, according to their own definitions, are correct. But they're correct in simply what they perceive, but not necessarily in what makes an economic system happen. Recently, Bernanke was asked, what is inflation, by Ron Paul? And his answer was the Consumer Price Index. But the Consumer Price Index is the result of inflation. And inflation means what is a debasement of a currency, the creation of more dollars, is growth in credit and growth in monetary aggregates. And that growth is the engine which always, regardless of economic circumstances, will, when taken to the extremes we're seeing now, create an increase in prices. Now, whenever anybody is asked to explain the price of energy, and on comes your fundamentalists who talk about tankers sitting out filled with crude and world oversupply, and when they were talking about demand destruction. So how in the world can you rationalize that crude is trading between 67 and 72? There is no rationalization, except for one thing: the depreciation of the U.S. dollar and the fact that crude is an international market. It's crude and the price of dollars. And the explanation is the crude is not up, the dollar is down. Gold is not up, the dollar is down. The creation of more dollars in the form of monetary aggregates and in the form of credit in a system is what creates prices regardless of circumstances. Now we're starting to see the prices of industrial metals increase. You see China buying copper, buying nickel. You see China all over the world accumulating all kinds of metals and energies, companies and properties, explorations and exploitations. And it becomes, in a sense, inexplicable to the fundamentalist who says the industrial process is extraordinarily slow. Why in the world are such prices being paid for something as simple as iron? And the answer is very simple and explains and answers the question you posed. We're in a hyperinflationary period which right now exists in credit in the system and monetary aggregates. And that, without any doubt, is already starting to surface in the prices of tangibles. And hyperinflation, which is the next step, is not a product of a recovering economy, because in every single historical case, without exception, hyperinflation has occurred when confidence is lost in a currency. It has never occurred in an ebullient business set of circumstances. It doesn't require a recovery in economic activity. It's a product of loss of confidence in the currency. Now, when the currency is the reserve currency, and even though everyone wants to diversify, everybody's still loaded with dollars in central banks, and therefore to deny it's the reserve currency, it may not be of choice, it may be of accident or a poor choice, but it is what it is. So when the loss of confidence occurs in something in the form of a reserve currency, it results in the Western world having an extraordinary problem called hyperinflation without any ability to explain it in terms of supply and demand economics or economic activity. So those that deny this are in denial of history. Mm-hmm. They've never gone back and studied every single occurrence of hyperinflation from the beginning of time. So the answer is inflation is increase in credit and monetary aggregates. Deflation is debt failure, and you have both of them happening right now, not only in the form of debt failing, but more so the failure of financial instruments. The failure of financial instruments is the failure of the over-the-counter derivative. So governments are fighting through the central banks deflation by creating additional monetary aggregates and outrageous amounts of credit within the system. Therefore, the dollar is going lower. And in my opinion, 54 days from today, the period of time in which the Chinese have given the U.S. to change certain key financial policies, there'll be a general loss of confidence in the dollar, which will be the birth of publicly perceived hyperinflation. It's a long answer, but that is the answer to your question.
You do cover it in the sense that you're saying there's going to be inflation, and I agree with that. I kind of wore listeners out because for 6 or 7 years I talked about a speech Greenspan gave in Belgium from 1997 where he was talking about the fact that the banks would make these off-table bets, as you know, Jim, in the form of derivatives, and it was $110 trillion back then. We'll get into this later, and you'll talk about what the number is today. It's staggering. But if they win, they would keep those winnings. But if they lose, systemically the taxpayer stood ready to bail them out. And 5 times during that speech, Greenspan repeated that the banks stand ready, central banks stand ready to create money without limit. And so for those of us who understood that, it meant that the dollar could be destroyed overnight or in a very short period of time when the money printing began. But there's an interesting part of that, and I always thought that the key to this inflation-deflation debate also was inside that speech, and I'll just read very quickly the tail end of that because I want to get your comments. Quote, thus central banks are led to provide what essentially amounts to catastrophic financial insurance coverage. If the owners or managers of private financial institutions were to anticipate being propped up frequently by government support, it would only encourage reckless and irresponsible practices. On the other hand, if central banks effectively insulate private institutions from the largest potential losses, however incurred, increased laxity could threaten a major drain on taxpayers or produce inflationary instability as a consequence of excess money creation. In the end of that last sentence, I think it's the key to the inflation-deflation debate, Jim, or produce inflationary instability as a consequence of excess money creation.
Creation of money creates prices. Creation of money equals increased prices. What part of that equation is the inflation? The creation of money. The increased prices is the result. What's cause? The increased creation of money and credit. The result is prices. Therefore, the inflation is the monetary aggregating credit, and the increased prices is the result thereof. And that occurs in an environment of debt failure and failure of financial instruments. So inflation and deflation are one.
Is the U.S. in the early stages of a depression, in your opinion?
No, it's in the later stages. The financial industry is in the middle of a boom. Middle America is in a depression. Go to Detroit. How about a 12% unemployment in California? You know, it depends on who it is. If you're making money, it's a recession. And if you're out of work, it's a depression. The dichotomy between the financial people making trillions, more money than's ever been made in history, 500 employees of 500 was more than that. It was thousands. Received $1 million from a major financial firm in New York. At the same time, how many people do the listeners know who are out of work right now? 1 in 10, 2 in 10. In Detroit, 6 in 10.
Some people are talking about the Wall Street criminals or criminal syndicates in the banking industry. Is this somewhat reminiscent of the end of an empire as you start to decline? Meaning, is the country being looted here? Jim, that's my question for you.
Well, when one class makes all the money and another class, which makes up the 99% of the citizens, ends up owing that money, then you've created the seeds of decline and deterioration common in any society that now is history. Is it greed or is it theft? If you lose it, it's theft. If you gain it, it's greed, and greed is good, according to those people.
As the chasm grows then between rich and poor, which happens during these cycles, but this could be quite extreme, what are the social ramifications?
Social unrest.
Okay, let's talk about that a little bit.
Social unrest, and already means and methods to prepare for social unrest have in fact been in process.
Okay, meaning are we going to a police state?
Aren't we in it?
Okay, but is it going to get much worse and more extreme than what we're seeing so far here?
Yes, but maybe not perceptually, meaning the general listeners may not realize it. Where's the Constitution?
Being trashed.
Okay, but is the general listening populace terribly upset about it and doing anything about it?
No.
It means they don't perceive it.
Yeah.
They can mouth it, but they really don't perceive it.
Are you suggesting this will be a presentation that we're here to safeguard you? There'll be some false flag incident again?
Well, we're here to help you. I'm the IRS, and I'm here to help you.
Okay, all right.
You must take your vaccination. I'm here to help you, and if you don't, you're a criminal. We won't have a death panel, but the doctor does have to show you your alternatives.
Let me ask you this. Charlie Munger, he's in his 80s, right? So he's just going to say what he wants to say. But from over at Berkshire Hathaway, Warren Buffett's partner, he commented that we have to perform